Welcome to the StockMatter.com studios here in the Black Hills of South Dakota. I'm your StockMatter, Brian Johnson, making professional trading simple. And we did have a down day to the markets today, breaking that ever elusive 10,950 area and 1180-ish area on the Dow and the S&P respectively. Those were good areas to get short. We did not see the selling pressure I would have liked to have seen when those areas were broken. So, we are in tweener mode. I am not completely convinced that we are going to be crashing by any means or looking at any further pullback if this area can hold. I'm going to give the bulls about a day, I don't know, maybe two. We'll see if we consolidate sideways here. That's what I'm really curious to see, if we're going to consolidate sideways or if the bulls are quickly going to do what they do, and that is buy everything back up, what they believe is a less expensive level. But that will be the next step. So I'm going to slide this over ever so slightly. There we go. And show you the 60-minute here. We were watching this upper level here. Was kind of violated, whatever. We broke back into it though. Huge selling coming back in here. But once we broke that 10,950 area, which is this right here, my more major level, we didn't see. I was really kind of actually looking for bigger red bars, such as what we saw on the way down to get there. We saw consolidation at the bottom of it. Now it's holding just below where we were at there. Still could be some more stretch to the bottom side, but I was really wondering if a break of this 10,950 would bring in some heavier selling than this. If you day traded it, you did pretty well actually. It was a decent trade. Got into the 10/8s by the end of it. This is a big red bar, no doubt about it. However, just still has the potential to be just a pullback at this point. We're looking obviously at this level here to hold if and when it's ever retested. I would expect that maybe it would be. And we'll also be watching obviously now the 50. So the 50-day to the bottom and this 10,950/11,000 to the upside for your areas of support and resistance in the near term here. But this is starting to slowly work its way out. Like I said, I'm not convinced that this maybe isn't a 1, 2, 3. Now we're working our way downwards into a 4. Your next break, if you're short and you stayed short overnight, that's just fine. I'd watch for any heavy buying in the morning, and I'd be out of it. But otherwise, if it doesn't get above 11,000, I think you could be in pretty good shape with the short. I really like it. I still like it below 10,950. However, looking at it in the bigger picture, it'd be a little disingenuous of me to tell you that, oh yeah, all in bearish here, baby. You got to get short or you're going to miss the boat. That is just not what I'm seeing here. So, still the potential for this to be just a pullback, and for it to be a large bull flag before it's all over with. Next levels to watch, 50 and above 11,000 ultimately. NASDAQ on a 60-minute also breaking down today. Look how it consolidated like the other ones did though. Didn't want to get too far down here. From a daily standpoint, you can see it hitting this lower level. It was down to the 50-day, and actually I'm looking at some news at the end, and Google Finance is saying S&P 500 approaches 50-day moving average. Oh, I hate it when the major news starts talking about things like 20 and 50-day moving averages and head and shoulders and start to pretend like they're all technical and everything on everybody. That usually ends up being a bad omen for things. But they're right in the respect that we do have to watch this 50-day. I think that could be a big problem for the bulls if we get a close below it, and B, a couple closes below it. One close below it, now that it's actually been brought out in the news, makes me a little wary. One close below the 50-day won't be good enough for me. I'm going to need some extra confirmation that's going to hold below the 50-day before I get more bearish on the markets. Because it would be like the bigger markets to bring this thing down, close below the 50, and then the next day rip it right back up again and just get all those people that, oh, hey, I read that if it gets below the 50-day and closes below it, it's going to get really bearish, and then all of a sudden it rips back up to the upside. That is exactly how the markets work. So we'll see. Closes. We're watching for a close below the 50, and ultimately some confirmation after that it's going to continue to do that. From a weekly standpoint, that would also make this very bearish if we did close below the 50-day moving average, because that would put us dangerously close at or beyond, below, whatever, this bigger line of support on the weekly. This is one to really be watching now. We talked about that. Eventually, this line is going to break, and it might come down here to this and then roll back around and retest. I don't know yet. Still way too early to be talking about that. But that would all start with a break below that 50-day moving average and a couple closes below that 50-day moving average. SPX on a 60-minute, you can see it doing the same thing, gapping down, kind of wandering its way downwards here. Break below 1180. I said what? Get short below 1178, 1175 for the more conservative. Was a good place to get short, but it didn't fall like I was watching for. I was waiting for some heavy selling to come in. Not a lot of it happened. It just kind of woed the pony up down here. Now it's holding and creating kind of this bull flag type of a look. Still have to be very cautious down here. Got to trade what I'm seeing, and what I'm seeing is right now just a pullback coming right back to at on the 50-day moving average, which is exactly what we should see. A little bit of support down here. That's very, very common. But we got to have breaks and closes below that moving average to really start to set in a more bearish tone to the markets. Right now, this just looks like a big pullback. I'm still struggling. Maybe it's because we've been burned so many times. I'm trying, but I'm telling you, the charts are what the charts are, and that's the way I run my courses, and that's the way I run my videos. You guys know that by now if you've been following me for any length of time. And this is I'm still neutral to bullish on this market. This is still just an ABC type of a look. That is a bull flag. That's a whatever you want to call it. Type of a look to the markets. It's got to be breaking to this downside to make a more bearish tone overall. Weekly standpoint, it is only Tuesday, but you can see us starting to poke our head below this larger support area. I'm not going to really hang on that too long because it's only Tuesday. We'll wait till Thursday to see what we've got then. You know how quickly these weekly candles change. VIX, though, confirming what we're seeing. Big move up in the VIX, big move down in the markets. So we are starting to see the VIX kind of come back to life here. That's what I was talking about. Breaks up and above these areas and into the 25 area. Starting to show us a little bit more fear coming back into the markets. Will it hold? Who knows? We've still got a couple weeks left to really find out. But as it gets above this 22, 23 area, you can start to feel the fear coming back into the markets. That leads us lower if it continues. Apple on a 60-minute was down again, $7.67, but look how well it magically holds to these lines that we have drawn in here.